Welcome on into today's video. We're going to be covering supply and demand. No, not supply and demand that you learned back in economics class. We're talking about supply and demand in the frame of the stock market and how that makes sense, how we can utilize supply and demand to better our own trading and investing, to decrease errors in our analysis, and then to ultimately make more money, achieve higher percent returns in the long run. So in this video, you're going to learn what supply and demand is in the frame of technical analysis in the stock market, how to chart supply and demand levels, which actually is a lot easier than you think, why it's better than your basic support and resistance lines, and actually why support and resistance could be harming you by your own trading and investing standards, because it's actually too strict for the ebbs and flows of the stock market. And then of course, we're going to cover how to benefit, how to utilize supply and demand in your own trading and investing, which are two different things. We want to make sure we cover both angles so you have a really good frame to work with depending upon the path that you want to utilize supply and demand in your own analysis. With that said, let me get myself off the screen so we have a nice big page to work with. And let's dive right in. So right now we are looking at a stock chart and we're looking at Home Depot, ticker symbol HD. We're looking at this stock over the past couple of years. Each of these candlesticks is 1 day. The first step to supply and demand trading is we have to identify support and resistance zone. Now, don't worry, it's not going to get super complicated. We're going to be talking about support resistance, why it's not actually useful, and then we're going to dive into why supply and demand trading is a better way to trade, to chart, and even invest. So right now we see Home Depot, okay? And what many people will tell you about support and resistance is that you want to find trend lines, you want to find multiple touches to a specific price point that a stock chart rejects or bounces off of. You know, for example, if a stock is pushing up and it's touching up to about $400, a couple different times upon different occasions, but it just can't seem to get above $400. Well, that's going to tell us we have strong resistance at $400, and vice versa on the downside. If a stock is coming down, let's say to $100, and it's hitting that level multiple times and bouncing back up, hitting it, bouncing back up, it's not breaking below. Well, that tells us that we have strong support at $100. And what supply and demand actually is telling us and is allowing us to play off of is essentially that, but it's going to eliminate a lot of the errors in support and resistance trading. And you'll understand what I mean by the end of today's video. So for example, when we're looking at this chart for Home Depot, what you might notice is that we can draw some trend lines throughout the past history, and that you'll see a general trend to the downside right there. And if you were to zoom this chart in, you'll notice that we can probably draw in some areas of support. For example, I see a lot of these candlesticks right here that are holding support. That was an area of support. Even more recently, we have an area that was acting as resistance, and we broke above, then fell right back below. You'll see that these are areas that were acting as support and resistance in the past, but now things have changed, or they're not perfect. And that's exactly the market. The market's never perfect. It's never going to be the exact perfect A+ setup that you are looking for. It's never going to have the perfect pattern, textbook pattern. Like, it's great. It's cool. Like, when we get those situations, it's awesome. But it never is going to work out perfectly all the time. And that's why we like to use supply and demand instead. So just like that, we've drawn in a couple levels on our chart. This chart's, pretty zoomed back. If we were to, zoom into shorter time scales, these might look like, or some of these on the right-hand side might look like a bit more meaningful than, for example, they look now as we're super zoomed out on this Home Depot chart. But let's dive into now understanding what supply and demand is, then how to identify on our charts, and then comparing, contrasting to support and resistance with a stock like Home Depot. Then we'll show you some other examples on other stocks as well. So supply and demand. Supply refers to the amount of an asset that's available, while demand is the quantity of an asset that people are willing to buy. As the supply increases of, let's say, a stock, in this case, an asset, right, its value declines. And on the flip side, as supply of an asset decreases, its value rises. As demand increases, its value rises. And as demand decreases, its value declines. That's like the core of what supply and demand is. And translating that over to our charts, what we're looking for is essentially supply being areas of resistance, where we touch multiple times and then fall back off, and demand being areas where we see buyer step in, a stock hits, bounces, hits, bounces. And so can we find some areas of supply and demand here on this Home Depot chart? For sure we can. But what's different is that when it comes to support resistance, a lot of us are taught, or you're probably taught that, oh, you draw horizontal lines, you draw trend lines, yet they don't always work perfectly. And why is that the case? Well, if I was to zoom in here on Home Depot and I was to draw in a horizontal trend line, because we came up to roughly the same spot multiple times, what do you see? There isn't really a perfect place for me to put this trend line that's going to make sense or work perfectly and have all of these candles touch the same level and then reject without having any overshooting, without having, some candles not getting all the way to that level. And that's where we use supply and demand. So what we have right here is a clear area of resistance, a clear area of supply, okay, on the chart for Home Depot. But what we can do instead is, instead of drawing in those horizontal lines or even trend lines, if you see a trend, what we can do is we can actually draw in a zone. And by drawing in a box or drawing in a zone, as in this case a supply zone, as a resistance zone, what we're going to be able to do is we're going to be able to catch a lot more of those candlesticks in that zone. And it's going to provide us a better visual. And why is it a better visual? Well, when it comes to actually acting upon the analysis that we're doing, we want to make it so that there's less error to be had. And there's a lot more error when you have a hard line in the sand at a specific price point, almost to the cent. Many times a stock could overshoot that or not get quite there and then reject, or push just above and then fall right back down, as we've seen, happen many, many times across the stock market's history. And so that's exactly why we like to use supply and demand. So hopefully you're catching my drift here. Now, as we bring things, back out on the Home Depot chart, we have that level that acted as supply. And then as time goes on, what we can do is we can bring our zones over to the right. And so that will be a valid area to watch in the future if Home Depot ever gets back up to that price, days, weeks, months, even years down the road. And the same goes for demand. So what we're looking at right now is, as we zoom this chart on Home Depot out, where can we find a clear area of demand? Well, I'm going to start with a simple area of support. I'm going to draw a horizontal support line, and that will take me down towards right around here. But if I was to draw a valid support line, I want to get at least, 2 to 3 touches to this line across my candlesticks, where we have, 2 to 3 instances, ideally 3, that a stock gets to that level and just can't, fall below, it just bounces every time. That would be a support level. But in this case, as we zoom ourselves in, let me see if I can zoom this in so you guys can see it a little bit better. As we zoom in, what do we notice about this situation on Home Depot? Well, we don't quite get those 2 to 3, if not more, instances by a horizontal line. And we actually kind of undershoot here, and then we got kind of close there, but didn't totally get to the same price point of downside that we got back here on the first touch. And then the third touch was kind of a higher low and didn't get to that line altogether. And so, yes, we have a slight trend here. It's not enough to draw a trend line, because our trend line is not going to have much slope at all, and it's not going to be able to touch those lines either. Because if I draw a trend line from the bottom of this candle to this candle, it's, again, not perfect. What could we do? Well, we can draw in a demand zone. Using our box tool, we can draw in a demand zone that's going to now capture all of those candlesticks and even some more. And now what we have is a much better zone to risk off of in terms of a support zone that when the stock comes down to this zone, buyers tend to step in, and we see that demand starts to increase. Okay, so let's talk about some more examples, and let's start to use some trends as well. So here's a look at Apple over the past couple of years. And what you'll notice is that Apple has the same aspects of supply and demand, but more so in trend form. And here's what I mean. So we'll use our trend tool. What we're going to do is we're going to roughly try to draw this downtrend from the beginning of this year on Apple. And then what we're going to do is we're going to extend this box so that we can capture multiple points along this path. And that's exactly what we're doing here with this box. And as we adjust it, what we now have is an area of supply, but now in trend form. And so we can extend this trend to the downside, and this trend actually will work way better when trading Apple stock compared to just one horizontal line, which is not going to be perfect. This is going to account for some error, which is totally fine when it comes to the world of trading and investing, where there are really no hard rules that we have to follow. It's whatever makes sense to us and fits our needs. And so when it comes to the size of these boxes, it really comes down to your personal preference, and it comes down to the error that you're willing to allow on your specific chart. Now, in this case, on Apple, right, we have a bunch of those tops connected. So that is an area, for example, that we have supply. That's our resistance zone, and we have a trend to it. We can zoom in on shorter term timescales and see similar situations and draw smaller trends inside of the short term timescales. So let me see if I can draw this one in right here. Boom. Just like that. Now we have an example of Apple right here as I zoom it in, where we've got multiple candles, actually 1, 2, 3, 4, 5, 6, 7 candles roughly, that all come up into this trend zone and then reject. But it's not a perfect trend. Again, if I was to get rid of this box and I was to draw in a trend line and I tried to connect these candlestick tops, it's not going to be perfect. You can get a rough idea, and for some that might work, and you can kind of understand that there is error involved. But for a lot of people like me especially, who probably get a better visual by seeing a zone in a box instead of just one line, it's going to work so much better. If we zoom ourselves out, what are we going to notice? Well, we can also draw in a trend line here on Apple over the past couple months. This one actually works really, really well. They're not always going to work really, really well, but in this case, we've got uptrending support here on Apple, and we hold this trend line exceptionally well. But same thing applies. I can draw in a channel. I can draw in this box right here, and I can make it super tight, especially if it really respects this trend line very, very well. I can draw in this zone, and I can draw in this box a bit tighter. I don't have to have a huge thickness or a huge width to my box to account for a lot of error, as this stock seems to be respecting this level or this line or this zone very, very well. And this was an area of uptrending demand where we had a demand zone that was trending up over time. So with that said, hopefully now you guys have a really good understanding for what supply and demand trading is. And it's really how you can take your support and resistance lines to the next level. So now what about the application to trading and investing? Well, when it comes to investing, for example, if I zoom out on Apple stock, I might want to look at the 1 week time frame. So these candlesticks are 1 day. I might want to go and zoom out to the 5-year chart and pull up each candlestick that covers a week over the past 5 years or so. And I can zoom out even further. And what you can do here is now you can utilize this to identify areas that could be potential buy zones on the big picture charts and the big picture timeframes for Apple. So if I'm looking at Apple and I'm saying to myself, well, maybe I dollar cost average, and I have a portfolio that I, have a collection of stocks that I dollar cost average, and I just buy every single, month or every couple of weeks or every day, right? For example, depending on how you dollar cost average. And you just keep buying, and these are companies, or it's an ETF or whatever that you want to hold for the long term, and you don't really care about the day-to-day fluctuations. That's totally fine. That's awesome. But what happens is now maybe you have some extra cash lying around, or maybe it's, a time where you're getting a little bit concerned that you have, too much exposure to, let's say, one stock. And Apple's done very, very well the past 5 years, right? For example, even longer, the past decade. And you know what? Apple, you're getting kind of concerned. Maybe you identify this supply zone, and this is an area that maybe you want to trim some of your Apple position and then redistribute that money into other stocks or into an ETF, a collection of stocks, something along those lines. So you can utilize that to give you some relative areas that make sense based off of prior supply and demand, prior support resistance, to be good areas to buy or sell on a given stock or ETF. When it comes to be more active and more so the trading side of things, we can look at this area as an area to go short. This is going to be an area that we want to take positions. We can play puts, we can play calls, we can just take shares short, or we can even have some leverage depending upon our style on how we want to trade specific stocks. This area, for example, this supply zone, if Apple gets back up into this zone, what I would be looking for is a rejection into this zone, and then I could take a short position somewhere here as it starts to break down out of that zone. And guess what? My stop loss is going to be if Apple breaks out to the upside above that zone. It allows us to identify stop losses and identify our risk in a very, very easy to visualize manner, which is going to eliminate a lot of the, we're really close to the support level. We just kind of broke below barely, but maybe we're going to hold. It eliminates a lot of that because it allows for there to be some area for error on your charts so that we don't necessarily need to get stopped out of a trade because a stock goes a couple cents above our resistance line only to find that it rejects and it falls right back to the downside. same again on the support side. And that's the biggest reason why we love to use supply and demand in our own trading. Awesome. So if you want to take it a step further, I will recommend that webinar covering those 3 trading signals to add to your arsenal. Down below in the video description box, we build off supply and demand. We talk about a couple other things that are going to help you, as well as something like sentiment, how to use that to frame your mindset before you enter a trade or investment, as well as other signals and tactics that will benefit you. Again, that'll be linked up down below. Thanks so much for watching today's video. If you got something out of it, hit that thumbs up button. Make sure you are subscribed here to the community and share this video with a friend, someone who may not already know about supply and demand trading and how they can use that to benefit themselves, as you have just learned here in today's video. Thanks so much. Have a great rest of your day.